Hey everybody, Jared Duckett Ladd, Dental CPAs and Advisors, back with my business partner, Bill Ladd. And Bill, what do you think, man? We're about, what are we, just a little, 2 weeks or so into tax season? How's your head, man? How you feeling?
Man, I'm exhausted already. It's not just the standard tax season stuff though, Jared. I mean, there's just a lot of stuff that we're having to sort through very quickly with very little guidance. With some of the rules that came through late in the year, every time that happens in the tax world, it makes our job a little bit tougher. Not that anybody really cares or feels sorry for us, but there's a lot of big things shaking that we're just trying to understand and get to the bottom of. And that's one of the things we'll be talking about today.
Yeah, I mean, this tax season's starting off busy with PPP2. You guys have seen us talk a lot about that, working with a lot of our clients now, and if they qualify and do they need it, and the application process and all that. But really today we wanted to dive into what I would say is probably one of the most, I wouldn't say most, that's a big word, a big overlooked aspect of the COVID relief bill to a degree. And that's the employee retention tax credit. And what we're going to do, we're going to stay pretty high level because you can get really, really detailed on how all this works, the ins and outs and everything. But we're going to try to stay pretty high and just talk about the aspects of how it works, the changes that were made to it with the COVID relief bill and all that.
What's funny, Jared, is you think back to the CARES Act that came out. And I remember this provision when it came up, we kind of shut our mind off, because what you'll hear shortly is that if you obtained PPP money, that you didn't qualify. So we're like, okay, great. One less thing we have to understand, this change. But, what we'll see is this provision did potentially allow for you to obtain both a PPP and this credit. And so now everybody's kind of scrambling to learn the ins and the outs. And some of it seems like it's pretty consistent with the original law, and others, it's kind of adding bits and pieces. So, it's certainly something that I think is new, but I think you'll also, or something very impactful, but I think you'll also hear us say a lot that we're still waiting on a lot of guidance to come out on this as well, right?
Yeah, you're exactly right. And you're right. I mean, if you're listening to this video and this is the first time you've heard about this employee retention tax credit, it's been around since the CARES Act. It came out in March of 2020, and I can remember when it came out, but the PPP loan came out just like right after it, and almost just kind of swamped it, right? Kind of ate it up and didn't put it as detailed. So let me just share a screen. We've got just a quick deck we're going to kind of put together here, just to kind of go over exactly how this works to a degree. So really, what is the employee retention tax credit? Okay, so it came out in the CARES Act back in March of last year, and it's basically a refundable payroll tax credit. And you're probably thinking, what does that mean? Well, it runs through your payroll tax returns, your Forms 941. Okay, and it's a refundable credit. So if it comes up that the credit is more than what you are to pay in, you get that money back, if that makes sense. Okay, and who qualifies for it? Who actually can do this? And I'm going to talk about where it was at last year. And it's basically available to taxpayers who had their business fully or partially suspended in 2020, or had a 50% drop in gross receipts for quarters in 2020 relative to the same quarter back in 19. So I remember right when this came out, a bunch of businesses were being shut down. A lot of our dental offices,
yeah, for sure,
shut down. Our clients that are dentists, and this came out and was like, okay, this is great. How's this work? But then PPP came, so this was kind of set by the wayside. And how it worked, like Bill said, if you got that PPP loan at that time, you couldn't get this credit.
So the way I always kind of conceptualize this, right or wrong, Jared, is, hey, here's the lead, which is PPP. However, if you do not want to go out and get PPP, or you're not comfortable for some reason doing that, well, here's a way that we can still supplement your operations to help you keep a little cash in the business. I understood conceptually why it was there. But again, like you said, most of our clients were in the midst of extreme economic uncertainty. And of course, PPP kind of served as that lifeline for a lot of them when they were forced to be shut down. So obviously, most of the ones we work with hit that criteria, Jared, because they were forced to shut down by mandates.
Yeah, no, you're exactly right. And so you're probably asking, well, okay, yeah, that's me. I was shut down. How's it work? How's the credit work? So let's see the first one. If you were fully or partially suspended, okay, you were shut down, then any wages that you pay to employees during that time, okay, during the time of shutdown, let's say you were shut down 7 weeks, any wages that you pay to those employees during that time, those wages with times 50% is the amount of the credit with a cap per employee, if that makes sense. And I'm not saying that very well, but basically it's not like all the wages paid times 50%. It's up to 10,000 per employee is how it will work at 50%.
Yeah, and I think this is where it's really confusing. This is one that we had to study over, and to give you a lot of credit, you spent a lot of time on this studying over and over, because it's not as simple as it seems. And there's, to your point there, on qualifying wages, and then there's the potential to look at different periods it could cover. I mean, it's not simple. And I don't know that our goal here would be to have taxpayers understand, exactly how to do the calculation. I think your point, Jared, is generally speaking, when you kind of look at this, if during the periods that you're eligible, then if you pay someone $10,000, you could potentially get a $5,000 credit. Did I say that correctly?
100%. So I'll throw another example. A lot of our dental clients, when they were shut down, they furloughed their employees, okay? But maybe they were only partially shut down. And so they stayed with, let's say, a front desk person, maybe a dental assistant, and maybe the doctor was there, okay? And they were doing emergency only. Well, you were paying that front desk, you were paying that dental assistant wages during that time. And so if you paid, I'm going to throw a number out here. If you paid your front desk person, I'm going to say $3,000 during that time, and you paid an assistant $4,000 during that time, that's $7,000 of qualified wages. 50% of that would be a credit. That's high level how it would work.
How it would have worked if you would have claimed the credits initially when if you had not gotten the PPP.
That's right. That's
okay.
Right. So yep. That's kind of nuts and bolts of what the credit is. And like I said, the big thing originally, when this came out, that if you got that PPP loan, you were ineligible for this. So what we want to do really today, just briefly, is talk about, well, what did this COVID relief bill do? What changed? What changes did it make to the credit? And there were really two sections in this bill. Again, this was passed December 27th, right? The president signed the law. It had a section 206 and a 207. And really it did two things. One, the section 206 kind of changed, I'm going to say, the rules a little bit on the credit for 2020. And then the section 207 extended the credit. This was supposed to expire December 31st. It extended the credit for 2 more quarters in 2021 and changed the computation a little bit. So we're kind of going to go over those briefly of what that looks like. So 206, again, that's the one that changed the credit for 2020. The big thing we've said 4 or 5 times already, if you received the PPP loan, the big deal is now you are eligible for this employee retention tax credit. And that's why we're referring it to as retroactive, right?
Yeah.
You received the PPP loan, you didn't get these credits throughout the year. Now you can go back and retroactively claim them if you qualify. A couple other changes: treatment of allocable healthcare costs. So there are healthcare costs that are eligible for the credit, even if no wages are paid to the employee. So an example, you furloughed an individual, but you kept them on the health insurance and paid their health insurance. That would be I'm going to say qualified wage, a qualified cost that's eligible for that credit. And this is the one, Bill, I'm not going to get too detailed because this is like strategy through and through to a degree, but you can't double dip on the payroll costs for this credit. You can't use payroll costs for this credit and then use those same costs to use those as forgivable PPP loan expenses. You can't double dip there. And so there's a little problems maybe that creates to a degree. You might be saying, well, Jared, I already qualified for forgiveness. I already sent, I got PPP 1, sent it to my banker. We got it forgiven. What now? Well, we don't really know what that looks like now. We're still waiting on guidance. You'll hear us say this a lot in just a second. We're still waiting on guidance, really what that looks like. I'm anticipating, Bill, I don't know your thoughts, but I would assume they're going to come out and kind of work with taxpayers on this, because it's not the intent of what it was trying to do. But I think they're going to try to smooth that over if maybe I'm hoping too much, but I think they will.
Well, I mean, you would think by its retroactive nature that it's designed to be a benefit to struggling businesses, not necessarily punitive to rules that were already in place and that people follow by in good faith. So really what, excuse me, my mind goes to, Jared, is if you think about originally PPP was going to be kind of that 8-week covered period, right? Which that 8 weeks was probably pretty much going to be right in the heart of COVID. They then came out and moved that up to what is it, 24 weeks? I mean, they kind of bumped that up. So what's really interesting is most people, if they used a 24 covered period for their PPP forgiveness, would probably have an abundance of wages and in other costs to very easily qualify for forgiveness. So the question is, can you basically exclude, I think the word you say that maybe is in there is kind of elect out of using these costs that you're taking these credits on to, use in your forgiveness calculation, but still get the max benefit of forgiveness while also getting the credits. And while that seems like that feels like maybe that was their intent to be able to do that, my understanding, and Jared, tell me if I'm wrong, but there's really no crystal clear guidance on this in the FAQs on the IRS website that bless that thought process.
Yeah, we're still waiting on guidance. The IRS did a really great job since March on this credit, releasing FAQs, how it works. And now we're waiting on them to update those FAQs with the changes. But no, what you said, I think is exactly right. Again, speaking to dental offices here, that were closed, let's say in March into April, I guess all the way sometimes into June, if you had wages there that you could qualify for this ERC credit, if you do the 24-week period, you could probably have enough payroll and everything else where you wouldn't have to double dip where it would affect. Yeah. But again, we're waiting on guidance to see how you can elect.
So a thought process here, or what way we're looking at this with our clients is cool your jets on forgiveness. Right now we are hearing a lot of our clients, bankers, they're just hammering us. Let's get this done. They want to get this thing wrapped up. Yeah, they want to wrap this thing up, and I get it. We all do. Yeah. But man, I sure would like some clarity on this before we pull that trigger, because we've got a longer runway there. There's not time of the essence as much on that. Our hope is we get guidance fairly quickly, because a lot of this stuff we need to know how we file tax reports, right? That's your next bullet point there.
Yep. No, you're exactly right. How do you go back and claim the credit? So I haven't seen specific guidance on there on exactly how to do this. I've heard from other individuals about a couple ways that they think it might be. So one, maybe amending those quarterly 941s throughout 2020, where you could have claimed those credits. So you go back, amend it, and now retroactively claim it. I've heard that you can maybe catch them up while filing your fourth quarter 941. Well, guess what? Everybody in the world's filing their 941 right now for fourth quarter. I heard somebody else say, well, maybe they're going to do it on the first quarter of 2021. I think it might be all speculation, but I think we're still waiting on those guidance. Bill said, what you said is spot on. Let's wait and see what they say to do. Let's wait on the PPP loan forgiveness. If you got money here where you're going to be eligible, have a credit, wait for the guidance. Let's help you with the credit, and then we'll get the PPP loan forgiven. In that, and again, in the act, it says the IRS is to issue guidance quickly. Still kind of waiting on what that looks like.
So I guess a to do here, Jared, would be to talk to your payroll provider, to talk to your accountant, and just start kind of laying some of the groundwork here to see if you do qualify. Correct? I mean, is that kind of what dentists should be doing right now?
Yeah, if you're listening to this right now, and do two things. So say, okay, when was I shut down?
Yeah.
What dates were those? Go back day to day. I was shut down April the 10th through June the whatever that date is. Get that range. And then go and think, well, did I pay any wages to individuals during that time? Okay, all these individuals, there's a hundred full-time equivalent deal that doesn't, it's not going to pertain to many dentist office, so I'm not going to mention that to a degree. But did you pay anybody during that time? If so, you're probably eligible for this credit. So that's number one. The second thing to do, see if maybe you qualify not just on being shut down, but on that precipitous drop, on that 50% drop. Because if in the entirety of the second quarter, your gross revenue, your receipts dropped 50% or more from the same quarter in 2019, you can qualify for the whole quarter there. And then it gets interesting. I won't go too in detail, but that next quarter, if you've dropped, if you've gone up a little bit, but haven't yet met an 80% number, you can still qualify for that quarter. So you could qualify. It's interesting how it could work for a couple quarters too.
Yeah. Yeah.
And that could be a big deal. And that could get to where the PPP loan forgiveness gets a little tricky. But long story short, I'm rambling here. See if you qualify on the dates, because almost every dental office probably would. See if you paid wages, and double check that revenue drop. See if you qualify there too. Okay, so that 206, that's what happened for 2020. That's the changes for 2020. 207, like I said, extended the credit for the first two quarters of this year, 2021. Okay, that's the big deal. And it changed the computation of the credit in a couple different ways. Number one, it increased that percentage, the credit percentage. Okay, it increased it from 50% up to 70%. All right, that's a pretty big change.
Sure.
And then the cap. So like I said, the cap was $10,000 per employee per year last year.
Yeah.
Get a max credit of 50% of that $10,000, $5,000 per employee. They've now changed that to $10,000 per employee per quarter. So, and a 70% credit. So to a degree, you could get $7,000 per employee per first quarter, $7,000 per second quarter. Again,
and at this point right now, this covers the first two quarters.
That's right.
At this point. Yep.
Yeah. Right now, it's just the first two quarters. Okay, but you have to be eligible. And that's what 207 changed for the two quarters as well. Instead of a 50% drop, it's a 20% drop. Okay, so I'm going to use numbers because I'm an accountant here. This looks back the first quarter of 2021. You look back to the first quarter of 2019.
Okay, so let me stop you right there, Jared. So just so we're clear, just because you qualified in 2020, this is not saying you can continue on and getting these credits. I mean, this is a brand new look at how your business is doing beginning in Q1 of 2021. Has nothing to do with credits you maybe previously claimed.
Right.
Yep. Okay.
And most dentist offices aren't shut down anymore, right? Our clients, they're not shut down. So if they could qualify for first quarter, it'd be on this revenue reduction.
Right. Yep.
So say in 2019, they had, I'm going to throw out a number, $100,000 in the first quarter, and first quarter of 2021, they have $70,000. That's a 30% reduction. They're going to qualify for that credit. 70%, max of $10,000 per employee for that quarter. And then there is a provision there for 2021 to get an advance on that credit, to get that credit up front, and then you pay that through or report that through your 941. Confusing credit, Bill. I'll tell you what, I mean, it's, right when this came out, I started kind of writing down some notes and thought, man, this is pretty easy. And then more and more I got into the weeds. I'm like, whoa, this is detailed.
It's very confusing.
Very confusing, a lot going on. Like I said, I think the big benefit, from all the videos we do, guys, I want you to have a to-do from it, something that you get from it. I think it's, go look right now, what dates were you shut down? Number 1A, number 1B, did you pay any wages? or allocable healthcare costs during that time? If so, get with your accountant, get with your payroll provider, make sure you get that documentation, see how much of a credit you're talking about here. And then number two, also see if you've got that revenue reduction.
Yeah.
You can qualify, it's not and, you can qualify in two different ways. So it's confusing credit. Get with your CPA, get with your accountant if you have specific questions regarding you. But as guidance comes out, really answers a lot of the questions we still have, like how you claim the credit. We'll be right out here with another video to show you guys how that's done and definitely help you guys out. But
and just keep in mind one last thing too, is there is a interplay between the PPP and the employee retention tax credit. So that's why that guidance is going to be crucial, because it could affect some decision making you need to make with your tax advisor.
Yeah, exactly right. But I hope we did a good job there. I kind of confused myself as I was talking, but again, if you have questions, let us know. But like I always say, guys, subscribe to the channel. Like when we send the FAQs out on some updates, this comes right to your phone. You'll see it. You'll get some guidance that way. But anyway, guys, appreciate it always. Bill, appreciate it. Time to get back to work, right?
You bet.
All right, we'll see you.